The best trading strategy is not the most profitable one. It's actually the one that suits best for your life. And yet, many traders choose to go for a strategy that they saw on YouTube or someone that recommended it on Discord. Or maybe even something that made someone else $1,000 last month. And that's why many traders fail. It's not because the strategy doesn't work, it's because they don't match the strategy. In this video, we will cover the three main strategy directions: scalping, day trading, and swing trading. And we will also cover what exactly each of these strategies requires, how different markets and trading sessions affect your strategy, and which one would make the most sense for you, how to map your lifestyle, your job, your hours, your personality to the right approach, and also why the wrong strategy will destroy your mindset, even if your setups are technically good. Let's break it down. Not all markets are the same. Before you even pick your strategy, you need to understand something very important and fundamental. Not all markets are active in the same hours. This sounds obvious, but a lot of traders actually refuse to adjust to this. Take US futures, SP 500, NASDAQ, for example. The highest volume and most liquid sessions are actually during New York trading session time. European futures with assets such as the DAX, the Euro stocks, these are more active during the London session, roughly between 9 a.m. to 12 p.m. Central European time. After London closes, the volume drops significantly. Forex sits somewhere in between. The overlap between the London session and the New York session is peak for most major pairs. Or take gold, for example. It runs across all sessions, but the strong moments are during London and New York open time. Why does it even matter for you for strategy selection? Well, simple. If your most available hours don't overlap with peak activity in the market, your strategy is already going to face some difficulties. If you're a scalper and you want to trade DAX, but your activity time is actually after 8 p.m. Central European time, that's going to be a bit of a problem. If you're a swing trader, the session timing doesn't really matter. So in this video, we will show you how to pair your lifestyle and trading strategy. Okay, so what are the three strategy directions? Let's go through them now with no fluff. What is scalping? Scalping is a high-frequency, short-duration trading. You're usually in and out of a trade within a few minutes. You're targeting small moves and you're doing it repeatedly throughout the session. What does scalping require? First, it requires your full focus during active hours. You simply cannot scalp part-time. A fast reaction to price and no emotion. You have to be mechanical and fast. This means you need to have the ability to flip direction very, very quickly. So which markets are suitable for scalping? US futures during the open hours and high liquidity environments where small edges repeat frequently. So is scalping for you? Keep in mind, scalping is not for overthinkers. The best scalpers make decisions fast. They accept small losses without flinching, and they can reset between trades mentally within seconds. So if you work a 9 to 5, scalping may not be the best fit for you. We know what scalping is, but what about day trading? Day traders open and close positions within one single trading session, so there is no overnight risk. You might take 1 to 3 trades per day, targeting larger moves than a scalper, but smaller than a swing trader. We'll get to that in a second. What does day trading require? First, you would need 2 to 4 active hours for participation per session. It can be more flexible than scalping. Second, you would need a defined session you focus on. It could be London, the overlap, or the New York session. You would need patience to wait for your setup, and then decisiveness to actually execute it. And last but not least, you would need consistent pre-market preparation. That means getting up to date with all the news and prepare for the day. Which markets are the best suitable for day traders? The most liquid instruments would be Forex pairs, index futures, gold. The key here is picking a session and owning it. So is day trading for you? Day trading is probably the most balanced approach for traders who have dedicated hours for trading, but they don't want to sit 8 hours in front of a screen. So if you're trading seriously as a second income stream, a few hours every day before work or even in the evenings would be a good fit. The mental load could be challenging, but it is manageable if you have a good plan and you stick to it. So what about swing trading? Swing traders hold positions for multiple days, sometimes even weeks. They're looking for larger price moves that are driven by different fundamental shifts, macro themes, and key technical levels. They might take 1 to 5 trades per month rather than 1 to 5 trades per day. What does it require to become a swing trader? The patience to hold on through the noise. A position going against you by 0.5% is not a problem. It might might actually be normal. You would need to have strong macro awareness. You need to know what's happening and driving the market this week. You would need to have clear risk management with wider stops and also position sizing to match. And of course, significantly less screen time, but more pre-analysis. Which markets are suitable for swing traders? Actually, swing trading works across all markets. Forex, futures, stocks, even crypto. The key is choosing markets with clear directional narratives. Gold during a central bank cycle, an index during earnings season, or a currency pair during a rate decision period. Swing trading is built for people with limited but consistent time. A full-time professional or a student with irregular hours, maybe someone even with family commitments. You can check in once or twice a day, update your analysis, manage your positions, and still trade seriously. But it requires one very important psychological trait: the ability to sit and deal with uncertainty. If you're going to open your phone 40 times a day to check up on your trade, swing trading will destroy you mentally before it makes you money. So how do you choose a strategy based on your lifestyle? This is actually the part that most people skip. You need to ask yourself 4 questions before committing to one strategy. How many hours per day can I realistically dedicate to trading? If it's less than 1 hour, swing trading might be the option for you. 1 to 3 hours in specific sessions only, you should consider day trading. And if you have 4 hours or even more, you should have a look into day trading or scalping. So it's not about ambition, it's about honest scheduling. What does my daily routine actually look like? If you're working a full 9 to 5 job, you might be out of the market during peak hours. So you have a few realistic options. You could either trade different time zones, if that's the case for you, or after work analysis for swing trading. Do you have a part-time job, or maybe you're a student? So you most likely have some windows of availability. Map your free hours against peak session times. Find the overlap. That would be your trading window. Perhaps you're available full-time and you can make trading as your full-time focus. In this case, all 3 strategies are available for you. In this case, you should choose based on psychology and if it's a good fit, not based on the income potential. What about parents with unpredictable hours? Scalping is not realistic. It requires your attention and uninterrupted focus. Swing trading is your best option, but you need to build a daily check-in system and routine built around school runs, work, and family time. At the end, it all depends on how does the market timing interact with your schedule. Map it out literally. Write down when you're free, and then write down when the market of your choice is active. And if you find an overlap, that's your trading window. And if there's no overlap, simply change the market, not your lifestyle. Now let's talk about the psychological difference between all strategies, because this is exactly where a lot of traders fail. You can have the right strategy for your schedule and still fail. And that is if you have the wrong psychology for that strategy with emotional requirements. Each approach requires a fundamentally different mental operating system. Scalpers, for example, need to be comfortable psychologically with high trade frequency, rapid direction changes, and handling a losing streak within the session. People who fail scalping psychologically are people who need to be always right, people who second guess an entry for way too long, and people who tie confidence to their P&L mid-session. Day traders, on the other hand, have to balance 2 contradictory skills at the same time. They need to have the patience before the trade, and they need to have the decisiveness during the trade. The main psychological trap for day traders is boredom trading. The market is moving, you're watching, and nothing's happening. And then you take a trade just to feel active. This is one of the most common and expensive mistakes that day traders make. So who's going to struggle with day trading psychologically? It's going to be impulsive people who cannot tolerate not being in the trade, and people who cannot separate their analysis phase from the execution phase. Swing trading is psychologically the hardest of the 3, not in the moment, but over time. You enter a trade on Monday, now it's Thursday, and you can see that the trade is against you by 1.5%. You're still within your stop loss, and the original theory is still intact. Do you hold the trade? If your instinct is to close the trade and just see what happens, swing trading is going to ruin your edge. And your edge requires you to hold on through all this noise. Swing traders must have conviction, emotional neutrality, and the ability to sit with open positions mentally. So swing trading is not for people who change their mind frequently based on short-term price action. It's not for people who check obsessively their positions throughout the day. And it's not for people who need frequent feedback loops in order to feel confident. So if you're naturally an impatient person, be honest with yourself. Forcing swing trading onto someone who has an impatient personality is like training for a marathon when you hate running. That sentence is about me. You might survive it, but you will not thrive. So let's put everything together. Choosing a strategy is not a technical decision, it's a personal decision. The market will always reward people with discipline, preparation, and long-term vision. But discipline looks totally different in each strategy. A scalper's discipline is speed and detachment. And day trader's discipline is actually looking for the right moment for his setup. And the swing trader's discipline is being able to hold on to the position through the noise. So ask yourself, which type of discipline fits who you actually are? Then match it to your lifestyle, your hours, your market, your sessions, and then commit fully. Give that strategy an honest 90 days period. Build your journal, track your data. Most traders hop between strategies the moment it stops working. So that's not strategy selection, that's simply chaos. Your strategy is your system, and your system is your edge. And if you're looking to put your strategy to the test, the Trading Pit offers multi-asset funded prop trading challenges. So you can trade the markets and strategy and fit it to your life. You can find the link in the description. Happy trading!